Yo, 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 what's up, guys? It's been a minute since I've interacted with you guys. I'm excited because I've been taking some time off of trading. I have a full time job again, right? Last time you guys heard, full time. Let's go, hey, full time. So I haven't really been trading too much, especially during the New York session. I haven't been able to trade at all, really, the New York session, unless I'm sneaking on my phone and trying to trade. But I've been observing the markets, watching other traders, kind of learning things from them, whether if it's market structure or just certain setups and everything. And I've been just trying to find simple strategies, that I can not have to get so crazy with 10-second, 15-second scalps and all the things that I was doing, which were great. Like I said, I still enjoyed the scalps, but finding something that isn't based off of what I want, but more of what does the market have to offer based on what the market is telling us, right? Like what's the right thing to do when we're gonna follow the market. And this is the strategy that I've been watching just based off of what the market. You'll hear from traders like, don't try to predict the market, but take the data that the market has given you and framing your trade from there, which is why a lot of people watch. I use the market profile. A lot of people use order flow, like footprint charts. People use, bookmap, right? Like you want to use data from the market. So I've been trying to figure out how do I frame something like that, and I think I can turn off the candlesticks if I go here into settings. I'm just gonna do some drawings, right, of what I've been observing recently, right? So I'm just gonna do some drawings, right? So the first thing is we're gonna observe highs. I should try to write it highs and lows, right? We're gonna observe those. We're gonna observe these two areas, right? And the reason why these are important is because it follows market structure. I'll just write MS, right, for market structure. And the reason why we want to observe, market structure, obviously the strat, right? 3-1-2 reversals, 3-1-2 continuations, 2-1-2, all the things that we learned from the strat is just based off of highs and lows, right? And finding the time frame that fits. But obviously, we also know market structure from, smart money concepts, right? Paying attention to hourly, 4 hour, daily, market structure, weekly, market structure, monthly, all those things that still go back to the strat, but paying attention to the key term is, or key phrase is, the data that the market is giving you currently. Not what you're predicting, but what the market is giving you, okay? So we're going to focus on these highs and lows. So let's just look at a market rally, right? Something like this, and let's just say that this line that I'm drawing right now is representing the closures. So I'll put a C to represent the closing price. So every time price closed here, we expect a continuation, right? Every time price closed here, we're expecting a continuation. Same thing again here, right? Expecting a continuation. There will be a time where we're going to look like we're going to continue, but then we end up failing, right? Making a new low and then failing, making a new low and then failing, and then a whole new rally, right? We've seen this happen. This could be a 1 second chart, a 10 second chart, an hourly chart, a day. We've all seen this over and over again playing out through the market. But what I want to focus on is taking this trade here, taking this trade here, taking this trade here. There are times, I'll just go back on the drawings. There are going to be times where we break out, but then we end up selling out and then breaking out again, right? We've all seen this as the broad information, right? That can happen too, right? That could totally happen. But making sure we have the right risk whenever we do this to be able to take the second swing of the trade, right? Because you never know, because the market can keep doing this, right? Oops, ran out of space. The market can keep easily doing this, just keep going all day long, and just like that, and never have a stop loss retracement. So it could just give you money, 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 money. It can do that, right? Or it could do the opposite. Always take the stop and then go. Always take the stop and then go. We don't really know, but what can you accomplish when you sit down trading? What can you accomplish with the risks you're looking for? What can you accomplish to hit your daily goals on the day? And what can you accomplish by adding confluence, right? It's volume, your confluence, an RSI indicator, an oscillator, moving average, whatever it is that's going to give you confidence as well, confluence. That could help improve your win rate, your trade filtration, your A plus, your B plus, all those things that go with the filtration. So what I've been looking at is those like again, just drawing a simple drawing, is those closures above and taking that next leg, right? But the thing is, you have to ask yourself, which something I had to ask myself because this is what I've been looking at, is what's going to be my stop, which I still need to learn for this one, because what I always focus on when I build a model is not so much the stop yet, but where's my take profit, my TP or PT, whatever you want to use as your acronym. These are the two main focuses. You see what the market has done in the past based off of old data, for a trend, like to identify a trend like this, but how do you frame your own risk and reward model off of it? So I'll just show you what I've been doing, and I'll just draw a candle closure. Let me fix this box here in settings. So let's just say this is what I've been looking at, just investigating. Let's say we made some swing high, right? And it was this candle that ended up closing above the high. What I've been doing is, and I'll use a new color now. What I've been doing is I've been fibbing just by investigating, right? Because, I'm not really trading, I'm just watching. Is I'm fibbing the high and the low, and I'm looking for a projection off of this candle. What I've been looking at originally was a 1-to-1, but now I'm looking at a 77% projection, so that would be like 0.77. I've been looking at that. I look at 80. If you can risk more and get more consistent profitability, you could always look for, instead of a 1-to-1, it's like a 0.7, a 0.5, whatever is in the hit more often, so that either you could sell a contract there or leave a runner, whatever it is that you want to do to be more confident about taking the trade, taking risk off, or putting risk on. I've been looking at projections, so it might be something like this, or and then looking at the opposite side just in case if I want to figure out my stop loss and everything. So if I get this closure above these highs, I'm going to fib this, and I can build an indicator, which is going to be step number 2 for me with this, is build an indicator that will put these price targets and stop loss where I want it to be able to take this trade and lock in the gain. And then if I see that phenomenon happen again, so let's say this was trade 1, and then I see it happen again a little bit later in the day for trade 2 for something similar like this, might not be the same structure, but a closure over a high, could I take another trade and another trade and another trade until I reach my profit goal or I'm done for the day. So I'm going to turn the candlesticks, and I'm watching this in a 1 minute. I haven't really looked at higher time frames because I'm always trying to just scalp at nighttime or when I get a chance. But what I've been looking at is the 1 minute. So I'll go look for the easy examples, and then we'll go look at some ones that didn't work. But here's just an example right here, okay? So if you look right here, here's a high and a high. This right here is the main local high. So if I put a array, you can see this candle closed above this high. So this is telling you the market wants to go long. So if I put on the fibs that I've been working on, which is the 0.77, you can do a 1-to-1. I don't care. Use whatever you want. This is all just investigation. So if you look, you could see right here on this candle. Let's just say for now our stop is at the bottom of the candle, okay? And I'll color it to identify the stop. Purple's the stop. So if you look here, this trade never got stopped out, which was crazy that it was a 57.1 minute candle, but you could see we did hit the 0.77% projection. We also hit the 1-to-1 if I put the 1-to-1 on, but you can see the number I'm working on, it did hit. So right here, this could have been your one trade for the day for 44 points. Now let's go look at this one, because if you look right here, we also close above this high. So if I put my stop loss at the bottom of this candle and I fib out the 1-to-1 or the 0.77%, you can see here was another winning trade right here to the upside for 31 points, 31.25. And then if you look again, here's another local high right here. Could we have a minor pullback? And then you get your closure above the high right here. And if you look, it's a small candle, but still, this trade still did hit, right, to get you some profits on this trade. And it kept running, right? But small pullback. This gave you, I don't know, what is that? I had the magnet tool on, so it's about 8 points. And if you went for the 0.27 or the 1.77, they could give you 17 points, or you trail it, right? So we're paying attention to those closures. We want to make sure we close over the high, because if you look right here, there was never a long trade because there was no closure, no closure, no closure. We sell off. You don't get the closure above the high until over here, right? You got a closure here. So if we do the projection, you could see you end up getting stop out the bottom of the candle, but then we end up going long and you make back that loss. But just for the upside, this was targeting about 16.75. So if you risk this stop, you could have tried to went for a 1-to-1 to make back that loss and go break even, which it ended up doing either way. And then here's another break, a closure above, failed, and then we sold off, and then we never make a new high, and that's fine because that's the trend of the market. Now if we go look at the downside, we can go look right here, and you got your first closure right here, and you can fib out the 0.7 or 1-to-1, whatever you want to use. It's up to the individual, right? Let me get rid of this magnet. Okay, so if we look here at the closure of this candle, we end up getting pretty close. It did up hitting 1-to-1, but we hit mine, the 0.7, 77%. And this one gave you about 10 points for that trade. And then if we also look here, here's a closure below here. Stop loss gets hit, but then it ends up going back in your favor, which is totally fine. And if we look here, again, we end up hitting the 1-to-1, and we also hit the 0.70%, and we also hit 1.7%. So this trade was great. That one gave you almost about 8 points, and then with continuing the trade, gave you about 24 if you went for the second with another runner. And look at this one. Here's a swing point high. You could use this, or you could use this. Doesn't really matter to me. Let's just be picky and use the one that we're trying to use for the model. Here's a closure here. And here is our price target, which ends up getting hit and continuing a bit higher. So you could see this model has nothing to do to predicting the highs and the lows to the high. Like this model doesn't predict that. This is just following the data we're given, and if we're gonna break out of the market to continue higher. And you could see I'm not looking for the whole trend. I'm just looking for a deviation from the candle that closed over. Because if the market's closing over that high, then that means we should go higher, right? You can see right here we close over this high slightly, but that's kind of far away. Like I wouldn't really use something like this because this is way too far away. You can see how this local high works good, this local high works good. Something that's a little bit closer I'm seeing as well has a better chances of success compared to stuff that's been further away on the price chart.